James asked, if your side hustle has made a loss, can you deduct your expenses against your regular income, or do these losses get carried forward until, I guess, the side hustle makes money?
So there's a few rules that you need to be aware of. These are called the non-commercial loss rules, and there are 4 tests that you need to look at. You don't need to meet all 4, you just need to meet one. So one of those is that there is more than $20,000 in sales for the side hustle. That's excluding GST. The second test is you've made a profit 3 out of the last 5 years. There is real property involved in the business or the side hustle, which is that it's more than $500,000. So that's like if there's land or buildings, other assets that are used in the business. And then the last test is...
Nice side hustle if there's a 500K block of dirt or property.
I know. Let me just go. The last test is that there are assets in the business worth more than $100,000. And so when you say side hustle, this also incorporates other businesses that are making a loss. So this is in your individual name, and it includes the side hustle. So when you're looking at, can I claim these losses, you need to meet one of those tests. And so they're the 4 tests, and they apply to like a real business that's not just a side hustle. So it's important to make sure you're aware of all of those things.
Yeah, and I mean, if you are side hustling away and the money is starting to come in and you do have the curliest of little questions here, it might be worth paying an accountant a few $100s. You can claim that fee in the next financial year, or if they charge you before for the following year or whatever, it's deductible.
Absolutely.
But what I kind of try and tell people is with the side hustle, it basically just all sits on your TFN.
Yeah, exactly.
And even if you're a sole trader, it's all on that tax return, right?
Yes, and that's why it's important to look a bit broader as to, well, what are the rules? Because it incorporates more than just the side hustle. So if you do have a loss and you meet one of those tests, then that loss is applied to your other income. So if you have wages or dividends, interest, anything like that, the loss is applied. But if you don't meet one of these tests in a side hustle or a business, then you can't claim it. It just gets carried forward until the next year, and then you have to apply these tests again.
Awesome. Hey, it's Glen here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.